All right, so we had a great week last week in terms of rate improvements. What's causing all that? Well, the big question for people with money is your money safe? Fortunately for me, my money is safe because I have far less than $250,000 in the bank. But people that have more money or companies, they're in trouble and they're getting nervous over that. Well, what happens is when people are nervous with the banks, they start putting their money in other safe things, which is like bonds, mortgage backed securities. Therefore, the rates start getting better. So we had a great week last week. Today has been kind of an up and down one because it's making people nervous bigger, even as it's not just here in the US. In the US, we had Janet Yellen come out and she was being pressed and which banks would be safe, what depositors would be safe. And she just basically said, we'll have to see. We'll look at them. The Fed will look at them, and I'll look at them. So I don't know about yourself, but I would not be comfortable, and apparently a lot of people aren't, with Janet Yellen getting to decide whether or not your deposits are safe. The other thing that happened in Europe was Credit Suisse Bank, which was just recently valued at $8 billion, went under pressure, and then they ended up having to sell off to UBS for just $3.2 billion. So the market's definitely showing signs of some instability there. And instability, again, drives people to bonds. The other thing that's happening is this week we will have the Fed meeting, and then on Wednesday, Jerome Powell will be speaking. Now, depending on how he speaks, we'll end up shifting the market one way or the other. Hopefully, we see a rate hike of only 0.25% or no rate hike at all. That would be a good sign showing that they are getting that inflation has gotten out of control or gotten down, been going down, and that their price hikes have gotten out of control. So that's the update for this week. If you have any questions or need any assistance on any files, please call me.